Salesforce in focus as well. Under surveillance this morning, a major software slump.
Software companies understand AI better than anybody else. Software companies don't sell software, they sell services. Software is a cost for them, and that cost is now going down very substantially because AI is the best at writing code. And so they actually have an opportunity to increase margins even further. It's just the market's ignoring that right now.
So here's the latest this morning. A soft outlook from Salesforce sending the stock lower and fueling investor concerns in the sector. Gregg Moskowitz of Mizuho lowering his price target, but remaining optimistic, writing the following. We see a high likelihood of organic revenue re-acceleration and believe Salesforce remains committed to profitable growth. Gregg joins us now for more. Gregg, welcome to the program. We'll talk about the growth numbers and the outlook. I actually want to start with the buyback, because this has been a lingering question for a lot of people over the sell-off of the last several months or so. Why these companies haven't stepped in and bought their own stock. And then Salesforce did it and announced a major buyback, and it's failed to underpin confidence in the name. Gregg, just on that specifically, what was your reaction?
Well, first of all, thank you very much for having me. It's welcome. Frankly, Salesforce is not the first company in our space that has done this, that has stepped up recently and has just said, you know what, from our perspective, there's too much intrinsic value in the stock. We are going to put our money where our mouth is and accelerate our buyback. Now, it's a $50 billion authorization. What Salesforce has not said is how much more aggressive they will be in the near term, in the medium term. So that remains to be seen. But they made it very clear yesterday that they see uncommon value in the stock here. That being said, is it enough to overcome the negative narrative that exists right now that AI is going to be this disruptive force for so many software companies, or disruptive force to so many software companies? In other words, causing decelerating growth, causing more issues with SaaS-based models in particular. That narrative is very extreme right now. It's very strong. It's having an overwhelming effect on a lot of these names, including Salesforce. In my opinion, the buyback announcement is not going to be enough to offset that right now.
With that in mind, Gregg, as you think about the runway, the path forward, the calendar from here, how much longer, how much more time does this name need to demonstrate that they can counter that narrative?
It's a terrific question. And I think, really, Jonathan, it comes down to acceleration. Now, it has been a while since we've seen accelerating growth from Salesforce. They are telling us now that they expect that will happen in the second half of this fiscal year. So we're about, in our opinion, that's going to happen in Q3 of fiscal 27. So we're 3 quarters away from that occurring. If that does in fact happen, we think then investors can start to have more confidence in this business, the durability of it. The growth algorithm starts to look a little bit better. I would also point out that their productive sales reps are up 15% year over year. If you go back 12 months ago, that was just flat. So Salesforce themselves is seeing more reason to invest behind these trends. The real driver is what they call Agentforce. This is their agent-based AI software. It frankly got off to a very slow start in calendar 2025. The last couple of quarters, and especially this one, it has really picked up. It was at $540 million in annualized recurring revenue last quarter. It's now at $800 million. So the growth is starting to compound. And in calendar 2026, we think that's going to start to have a measurable impact on the overall growth for this company.
To be clear, Agentforce is a slew of autonomous AI agents that can do the whole process end to end, whether it's sales, service, marketing, et cetera. Gregg, it feels like the profitability acceleration that people are looking for in Salesforce has to come from the expense of either human capital or in terms of gaining market share from other potential software providers. It doesn't feel like it's a winner takes all type of environment. Which avenue do you think will allow them to accelerate revenues? Who loses?
So I agree. This is certainly not a winner-take-all environment or situation as it pertains to Salesforce or the space more more broadly. Now, where we see Agentforce being most applicable, certainly over the medium term, is in customer support, what they used to call their Service Cloud business. Secondarily, we see a real opportunity within certain aspects of Sales Cloud, which of course is their CRM business that they have been known for and really the roots of the company. Conversely, you mentioned marketing and commerce. That is a real pain point for Salesforce. That growth has been decelerating. We are not expecting that to pick up in calendar 2026 either. I think that's going to continue to be a thorn in the side of Salesforce. Having said that, it's also a smaller business than Service Cloud and Sales Cloud. And so we still think on a net basis, you're going to see some more meaningful trends around Agentforce and what it means for the growth of this company.
You sound pretty positive, and yet you lowered your price target to $265 from $280. Why?
In our opinion, this was a bit of a mixed quarter, slightly underwhelming. Their CRPO, what they call current remaining performance obligations, that's Salesforce's most important metric. It was 13% on a constant currency basis, 13% year-over-year growth. That's not bad, but it was right in line with guidance. Usually we see Salesforce do a little bit better than that. Also, their organic revenue growth was a little bit below where we and consensus had expected for this quarter. So again, I'd say a little bit underwhelming, and we're being reflective of that in our price target. It does not, however, change our view of accelerating growth in 2026. And our price target, of course, does still reflect substantial upside versus where the stock is trading today.